Hi guys, welcome back. Today we'll be taking a look at some of the Chinese stocks listed in the US. Before I begin, remember take a second to give the video a like and subscribe as you greatly help our channel. Without further ado, let's first start off with Alibaba. So Alibaba didn't really had a very fantastic week. In fact, even on Friday, you can see this very bearish looking candle, and it also came down with high volume. Even though we were supported just below the $100 psychological support levels, you can see that there was some stop hunting here at around $97 to $99, where retail investors actually put their stop losses just below the $100 psychological support, and the very next day it can continue to go up. So this is very common. The next resistance to watch if we were to retest back 121 will be 124.7 and even potentially 138.7, which is still quite far away. That's it. Next week supports to watch with 99.54, which coincides with this red baseline here. And if the $97 here, 97.58 were to break down, then things will start to turn ugly. We may be likely heading towards 94.46 and even 88.17. That's it. We are currently in the clouds. So do expect some cloud support here, and the cloud is also relatively thick. So there will be many support here coming in for Alibaba. Not forgetting, there is also a gap here that needs to be closed, and so a gap here that needs to be closed. So there are still many gaps in the charts of Alibaba. Let's move on to Tencent. So as you can see, Tencent next resistance to watch should be 51.58 and even potentially testing 53.42 and 57.63. But we already have started to pull back down, and we're actually finding some cloud support here. So on the way down, the cloud will act as a support. You can see that we are currently being supported here by the clouds. So if we pull back down further, then we're looking towards 46.39 and even 45.16 or even 43.64. So you can see that this rate baseline here at 46.51 is currently acting as a very strong support, and the resistance to clear would be this blue conversion line at 48.67. So currently now, if 43.64 start to break down and you start breaking down below these clouds, then things will start to turn ugly, even potentially testing 41.19 or even the $40 psychological support level. Let's move on to NetEase. So NetEase apparently did not really had a very good week. You can see that it dropped and it came down with quite a huge volume. So that's not really a good sign. We even broke this 38.2% at 93.59. So we are likely to test this $90 psychological support level, perhaps even closing this small gap here and even going back down to 84.20 if things will start turning ugly. So as you can see, there's a double top here. So we felt some resistance and we immediately pull back down. So the next resistance to watch would be this rate baseline at 96.61 and even the $100 psychological resistance for this blue conversion line. Let's move on to NIO. So NIO had a pretty good week. You can see that there was a lot of buying in volume. So when the volume is high and it's green, that's a good sign. It shows that buyers are in control and buyers are in round. So the resistance to watch will be 25.35 and even potentially retesting high of $24 at 23.98. So that's a good sign for NIO. If you start pull back down, then 18.92, 17.37, and 16.28. This is a very critical support for NIO at around 16.28. If you start breaking down, then things will start to turn ugly. And ideally, on the way down, the cloud should act as a good support at 17.37 here. Let's move on to JD.com. So JD.com also had a very good week, but we face a double top scenario on this particular Friday. So if we are pulling back down, then it's likely for us to be looking towards this particular conversion line here at 62.50, and even this rate baseline at 57.11. 59.54 will also act as a good support for JD.com. If we were to start to punch up, then we're looking towards 61.8% at 68.10, or even breaking above $70 to retest 73.88. Let's move on to Baidu. So Baidu, as you can see, it started to have show signs of weaknesses. Well, we did manage to close above 61.8% at 135.09. So the next resistance to watch will be 144.15 and even 155.70, which is the recent high. That said, you can see that it is clearly being rejected off this blue conversion line, and there's a lot of sellers around this area at 143. So if you start pulling back down, the cloud will act as a good support, and we're likely to be heading towards this 128.66 at this red baseline here. And at the same time, 135 will also act as a good support. Things will start to turn ugly if we were to break down this 122.36, and the cloud will start breaking down thereafter. Let's move on to Pinduoduo or PDD. So PDD had a good run, and it seems like it's consolidating now. But that's it. I believe that we should start breaking out to start creating higher highs and higher lows. We are creating higher lows now, so I hope we can create a higher high for next week. Looking at this resistance here, this will be the next target at 71.27 after clearing this $70 psychological support level, resistance level rather. And we actually closed a week at around 58.93 at around here, 78.6%. So it's still quite good. We are going now as close as possible to the conversion line. So if we do pull back down, this will be quite a big drop towards this rate baseline at 48.87, 48.77. And 61.8%, 52.96 would act as a strong temporary support as well if we were to start breaking down these levels. Let's move on to KWEB. So KWEB ended the week above this 61.8% at 30.15, and we were well above this $30 psychological support level. You can see on this particular day, this rate baseline acted as a very good support at 28.92, and we bounced off immediately, but we faced some rejection of this blue conversion line at 31.53. So the key resistance to watch would be 31.89 and 34.12. If you pull back down further, then 28.92 will be potentially retested, and we will start breaking down, the things will start turning ugly at 27.69, even potentially 26.17. The cloud support on the way down is quite thin, so it may break through quite easily. Let's move on to CWEB. So CWEB, as you can see, barely closed the week above this 61.8% at 65.44, and clearly you can see that this blue conversion line acted as a very strong resistance at 69.20. So this is the critical resistance for CWEB to clear. If you manage to clear them, we're looking towards 72.25 and even potentially testing this 80.92. And there's a very strong resistance here at 81.87. If you were to start pulling back down, then I do hope that this rate baseline will act as a very strong support here at around 60.66. At the same time, there's also a lot of cloud support and cloud resistance here, so do bear in mind that CWEB will be a bit tight ranging for now. Lastly, let's move on to FXI. So FXI, as you can see, we closed above 61.8% at 31.83. The resistance watch will be 32.92 and 34.30. If you were to start pulling back down, you can see that we are being really rejected off this blue conversion line at around 32.71. Looking at this support would be 31.07 and this rate conversion line, rate baseline rather. And at the same time, this will also be a good support here for FXI at around 30.30 and even 29.36 below this $30 psychological support level to perhaps do some stock hunting for retail investors. So as of now, most of the stocks seems to be trading a bit sideways, even though there are signs of weaknesses. It's very critical as if a huge rate volume start to show up next week, and even on a Friday, there is not really a good sign. There's a lot of profit taking, and there might be funds doing a sell down. So key resistance to watch will be the rate baseline. It cannot start breaking down, and if you do not find some support at the cloud supports, then things will start to turn ugly. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, appreciate the manipulation.